Hi, this is Garrison Comstock with Prime Properties Beach Cities. It's going to be a little bit different of a market update today. I'm going to get into what happened with the Fed over the weekend, what's going on with rates, and also in accordance with that, what's going on with the banks right now, what's their lending like, if you want to do refi, what's that like. Then we'll get into some of the stats with regards to the last month, and also what to expect moving forward with regards to the coronavirus and buying and selling. I've had a lot of questions on all of those in the past couple of days, so I figured I'd do a video and kind of get into it for everybody. So first, starting with the Fed. Okay, so we had rates hit all-time lows last week. I mean, they've been low for a while. They've been in the threes for a while. But then last week, for a day or two, they hit the twos. If you had talked to me in the past couple weeks, I was telling you, hey, what rate do you have on your home, for one? Two, you may want to refinance depending on how long you've paid that loan and how low your rate is, what your payment is. It may make sense, it may not. And three, if you pulled out money, what can you do with that? Because rates are so low, can you put it in more real estate? So I've had that conversation with a lot of you. With regards to what happened over the weekend, a lot of people woke up this morning expecting rates to be even lower. They weren't. They're still at 3.25% to 3.5-ish, which is still all-time lows, but not the lowest rates since the cavemen were roaming the earth that we had last week, which was absolutely insane. But the reason the Fed did what they did was because of last week, and not to make things lower for the consumer to stir the economy, but instead to help the banks, because the banks are in a little bit of trouble right now with the amount of loans in the pipeline, the rules they have to abide by, and the amount of cash they have in the interim. So to explain that, I guess it's easiest to say, there are $2 trillion worth of loans in the pipeline right now. That's refis and purchases. Last year, we set an all-time record for dollars generated in home loans at, you guessed it, $2 trillion. So that means that the banks are now straddled and trying to do a whole year's worth, by the way, a record-breaking year's worth of transactions of generating mortgages in a super, super short amount of time, in a month. They don't have the manpower to do it in the first place. They don't have the manpower to having people work extra hours in order to negotiate new rates, to get rate changes, in order to lock the rates, in order to approve the people, in order to get the money. They don't have the facilities to do that much business in this little bit amount of time. So everything, I have 4 escrows in right now, and 3 are closing soon and 1's new. But everybody's kind of put on hold right now for a second. Everything's taking really long. When you jump out of line, it takes a while to get back to where you were because the lenders are just so busy. But that's besides the point. The point of this was, in general, because of the margin call that insurance companies take when the difference between the rate lock and the rate gets to a point where it gets very expensive on the lender, is eating into a lot of the lenders' cash, and they don't have much to make these loans. Let me explain that a little better. So when you get a rate lock, it's not some magical system that says, okay, you now have this rate, right? And then you can close, everything's good, and you close later. It doesn't happen like that. There's things so the mortgage company is basically giving you a promise. They are saying, Mr. Buyer, we promise to give you a rate at 3.5%. And they do it because they know they can make a profit right now on that, and they also protect themselves with regards to that. They buy insurance through the interim, because sometimes you'll rate lock on day one, depending on where it's going, sometimes later on in the process. But they don't come up with the money or get the rate with regards to funding your loan until the end of the process. But they've promised you that rate now. So in the interim, wherever the rate goes, they need insurance on that. So they take out an insurance policy, whether protecting them against the rate increasing from that 3.5%. And they pay out that cash in the interim on the insurance policy. They're paying out cash on the insurance policy, paying out cash, which is fine because if the rate goes up, that means they can still give you the 3.5% they promised you. They lose money on the rate because rates go up, but they make money back on the insurance, so it ends up being a wash. But with the amount of loans and the amount of rates decreasing, or the amount of times the rates have decreased in the past 2 months, I guess, and the amount of loan volume, those insurance policies are getting incredibly expensive because now they've promised you that 3.5% and they've taken out an insurance policy above that, protecting themselves about getting higher. But when it gets lower, that insurance policy gets more and more expensive as rates get lower and rates get lower and rates get lower. And they don't get to make that money back until they close. So now they've got $2 trillion of money promised in loans, and they've got insurance policies on all of those loans that they're paying out money on every day, every week until the loans close. And then the rates drop and those get more expensive. Then the rates drop again and those get more expensive. And all of a sudden we're getting to the point where loans are closing and the banks don't have any cash. They don't have the cash to meet the requirements because they can't borrow from each other. They're getting really illiquid because they're not prepared for a year's worth of people asking for money in this little short, tiny amount of time. And people just kept piling on and piling on. I want to refi, I want this, which was good advice. This was advice we were giving the past couple weeks. But now it's coming to fruition on the banks, and the banks are really, really, really stressed right now. So that's why last week people called me, they're like, hey, did the banks arbitrarily just jack up the rates? I saw an article that said the banks arbitrarily jacked up the rates higher than they should be. Why are they doing that? Well, it's because they wanted everybody to stop. They're like, no new loans. Don't give us any more new loans. We have enough. So the minute, after the rates went to 2, in the 2s, the minute the rates pump back up right now, big lenders like Quicken just went boom, 4, all the way back up. They're like, no more loans. We don't want any. So it's they don't want to do any more business right now. They're so busy. So anyways, back to the Fed rate cut. What they're doing is they're increasing the liquidity for the banks to make sure that they can get through this phase because it's going to take time. They can do it. It'll just take a little bit of time. So the rates didn't lower for the consumer. They're still super low, but the liquidity of the banks increased. The Fed is going to buy $700 billion of treasuries and mortgage bonds. And that should help the liquidity. It's starting this morning at 40 million in treasuries and in mortgage bonds bought. And then also they cut the reserve requirements on banks so they can lend back and forth with each other. So that's fantastic as well. So they're doing what they can. That's what that Fed cut over the weekend was to make sure we don't get into the situation that the Fed saw coming down the road, that we get into a point where there's so many loans there the banks just can't handle it. So the Fed took a preliminary step to make sure they had liquidity. That's what that was. So back to stats from February. There was nothing too crazy here. The February stats when it comes to listings, the new listings in the area in the South Bay Beach areas was 263, which was normal amounts, around 250-ish. The sold listings was 137, which isn't summer amounts, but it isn't low. It came in January, it was 117. Remember, it was low. So this is higher than that. Those jumped up. Months of inventory is still low at only 1.8. The average days on market is 45, and the median days on market is 19. So half the place is still selling in under 19 days. Average days on market is normal for what it's been recently at 45. So, but the interesting part is, the 2-bedroom condos and townhome market. So there was a lot of new listings, 29, and a lot sold, 29. Months of inventory was only 1.2, and the average and median days on market were in the 60s, 67 average and 60 median. So That's really interesting to me because that's never above the 20, 25 to 30. Sometimes it was in the teens last year. So I looked at it. I looked at all 29 of those listings, and I saw that, or I found that 6 of them, so 6 of 29, were senior living community listings. That's 1/5, 20%. Those always last longer. Every single one of those was over 90 days. I think 4 of the 6 were over 110 days. So they brought everything down. But what happened to the median? I think the median, what happened to it is everything took longer. Everything's backed up, like I said, because of the lending. So a lot of these closings are taking a little bit longer these days. I think that's just what that was. We'll keep an eye on it. It could have just been more people. I think in January we only had 117 sales, sold listings, when we usually have 200. Now we have 150 this month, so it's increasing again. But maybe it was just the February numbers. The closings in the days on market are from January sales. So it could have just been that month changeover. So we'll monitor that next month. With regards to coronavirus, one, be safe out there. Make sure you're safe. Make sure you're washing your hands. Make sure you protect your loved ones. If you can stay at home, go ahead and stay at home. I'm at the office today because there are generally 3 types of people and how people react to this, right? There's the people that will go on business as usual. They're the people that will take the situation, take certain precautions, and then continue their business. And this applies both to work, but also the reality of home sales in the area, go both listings and selling. And there are people that will completely shut down and stop, right? I have a Purell here. I'm one that took necessary precautions. I wash my hands a lot, and I came and I'm doing business as usual with precautions, making sure I separate socially. I'm in my own office here and doing work. But anyways, the point being, a lot of people have been asking me, oh, geez, do you think that there's going to be some sort of price dip due to this because of the slowdown in the economy? My answer to that is no, because properties are still the most affordable they've been ever. Affordability is still high, even though you see prices are high. Affordability is still high. Also, when prices drop, it's when the market's flooded with listings. It's the supply and demand, right? So the market's flooded with a lot of listings to make prices drop because there's a lot of opportunity out there to buy and not a lot of buyers. Well, right now, there might be 1/3 or 2/3 of the buyers that are like, okay, let's take a pause. But the same thing's happening on the sell side. There's 2/3 of sellers that are like, hey, I don't want people in my open house coming in and touching things. And buyers are like, I don't want to go into an open house, come in and touch things. So it'll be more like a slowdown, everything will kind of stay steady for the time being until this blows past or until we see what happens next. It's not one side going crazy and the other side going the other way, which is what fundamentally changes the market. So the change in the next couple of weeks that I'll see, I have a couple closing, but I just put one into escrow last week, and I had another property that my client was interested in that sold before it even hit the market over the weekend. So obviously the interest and the buyers are still out there. But I think rather than competing for this property, it'll act like December, right? Rather than competing for the property with 10 people, you'll compete with the property with 4 people. And the inventory is still low, and the inventory will just get even tighter because some people who are planning on listing tomorrow will decide that they'd rather not, and they'll wait till this all clears out. So that's kind of my take on what's going to happen in the next month or so. Obviously, we'll see. I'll keep doing these market updates here every month. This one was interesting with the Fed rate cut and the coronavirus. Obviously, it's an interesting market out there right now. But as far as what I see in my day-to-day business, everything's business as usual. We've always had a low inventory. It's just getting lower. I have buyers now who are looking at this as an opportunity, and I have buyers that are looking at it as take their time. But it is what it is. That's normalcy. That's every market, whether there's a lot of listings or not. You have some people that take things one way and other people that take things the other way. And if it's equal on both sides, that means kind of status quo stays the same. So anyways, hope that was great. If you listened this far, thank you very much. If you have any questions, please feel free to let me know. I'm here. Other than that, I say have a great rest of your week and your month and stay healthy. And I'm here for you if you need anything.